I don't know about you guys, but it seems like everywhere I look, someone is talking about passive income. But most of the stuff that I see on social media just doesn't look legit. We've got people talking about creating ebooks. I see people talking about multi-level marketing schemes and dropshipping businesses and just a bunch of other stuff that really makes me scratch my head. Not that I think you can't make money doing those things. I just think a lot of people are pushing products with the intent of helping themselves out and not with the intent of helping you out. People like to push this dream and false narrative that you can make money sitting on your couch or on a beach by only working a couple of hours each day. The truth is that whether you're starting your own dropshipping business or creating an ebook or you're part of a multi-level marketing company or whatever else you do, you have to put in the work. And that's why I have a problem with people on social media pushing a lifestyle or promising massive passive income with minimal input. Anyways, in today's video, I want to touch on the trending topic of passive income. More specifically, I'm going to talk about dividend investing and how it's a strategy that anyone can utilize regardless of your education, your background, or how much money you have, or how much money you were born into. Whether you have $100 or $1 million, you can utilize dividend investing to create passive income. In fact, if you're around 25 years old, I'm going to show you how you can grow your portfolio to almost $1 million with as little as $3,500 today. For millions around the world, dividend investing is one of the easiest forms of passive income. You literally buy a stock, an ETF, or a real estate investment trust, and that company or fund pays you for being a shareholder. It's a strategy that's been around for as long as the stock market has been around, and it's not some scam or some get-rich-quick scheme. And unlike other forms of passive income, you don't have to do any work up front. You just need some money, lots of patience, and lots of discipline. While I'm going to be talking about dividend investing in a positive light, I'm also going to talk about some of the risks and drawbacks associated with dividend investing. Just like any other form of investing, whether it's real estate or cryptocurrency or the stock market, there are risks and downsides involved. No investment on this planet comes without some sort of risk. Now, obviously, some investments are riskier than others, but regardless, I want to provide you, the viewer, with the full picture so that you have the best understanding of dividend investing. Before we jump into the video, if you could do me a favor and hit that like and subscribe button, it would be greatly appreciated. It really helps with YouTube recommending this video and my other content to others. With that out of the way, let's talk about dividend investing and how you can use it to create passive income. When a publicly traded company generates profits, it has three choices for how to use the cash. It can reinvest the money back into the business, it can save the money, or it can return the profits back to shareholders as dividend payments. Dividend income is very similar to earning interest from a bank in exchange for holding your money in a savings account. But instead of the bank paying you money for keeping your money parked in their savings account, with dividend investing, the company pays you money for being a shareholder. As an example, let's say you own one share of a stock that's valued at $100. If that company's dividend yield is 5%, that means the company will pay you $5 each year in dividend income. If you've ever looked at a stock profile on Google Finance, every company has a dividend yield, and that's the amount the company will pay you annually for holding the stock. For many investors, dividend investing is a solid and safe way to grow your portfolio over the long term. For others who have a larger nest egg and are closer to retirement, dividend investing is a great way to generate cash flow or income when you're close to or in retirement. I think there's a common misconception that every company traded on the stock market offers a dividend, and that simply isn't true. Typically, dividends are offered by more mature companies that are in mature industries. Some popular examples of stocks that offer respectable dividends are AT&T, McDonald's, JP Morgan Chase, Johnson & Johnson, and Procter & Gamble. All of these companies are well-established brands that have been around for a long time. Not only that, they consistently deliver profits year after year after year after year. But let's be honest, these companies' growth trajectory isn't the same as a tech startup with a lot of upside potential. What I mean to say is McDonald's and Procter & Gamble's share price isn't going to double or triple anytime soon. And they understand that, and that's why they issue dividends back to their shareholders. It's sort of their way of saying, thank you for being a loyal shareholder. In general, your high-growth technology companies like Zoom or Tesla aren't going to offer a dividend because the money they make is reinvested back into the business. And to be completely honest, you don't buy high-growth technology companies for their dividend. You buy them with the intention of making money from the appreciation of their share price. I'm going to keep this really simple and really easy to understand. I'm going to use AT&T's dividend yield as an example on how you can create a $1,000 monthly income with dividend investing. I know, it's not the most exciting company on the planet, but most dividend companies aren't that exciting. AT&T has an excellent 6.71% dividend yield, which means for each $100 that you invest, they will pay you $6.71 a year. Obviously, $6.71 a year is a far cry from $1,000 a month. In fact, in order to make $1,000 a month, you would have to own roughly $179,000 worth of AT&T stock. But that's exactly the point I'm trying to make. To achieve $1,000 a month in passive income, you need to diligently invest, and you need to diligently reinvest over the long term. This may seem like a major effort, or it may seem impossible, but believe me, this is how the majority of people across the world created their wealth. They invest, they reinvest, and they reinvest, and they reinvest over a long period of time and let the power of compounding do its thing. Compound interest is like a small snowball that you drop at the top of a really long hill. The first couple of feet, the snowball is moving really slow and it isn't getting much bigger. But 100 yards down the hill, the snowball has gotten bigger and it's also moving faster. And as it moves further and further down the hill, it grows bigger and bigger and it gets moving faster and faster. This is called exponential growth, and this is the power of compound interest, and this is the power of long-term dividend investing. If you aren't familiar with what compound interest is and why it's considered to be the eighth wonder of the world, I'll post a link to the video I did above. Seriously, go check it out. It will change your life. All right, let's go back and talk about how you would create a $1,000 a month income from investing in AT&T. In this scenario that I drew up, you would need an initial investment of $3,500 into AT&T stock. Then each month after that, you would buy an additional $350 worth of AT&T stock while reinvesting your dividends for 20 years before you hit your target of $179,000. As we discussed earlier, the dividends from that $179,000 worth of stock would make you $1,000 of passive income a month. One of the great things about dividend investing is that you not only get the dividends, you also get to partake in the appreciation of the stock price. But one of the downsides of dividend investing is that the stock price is not guaranteed to appreciate. So while you may be making money on your dividends, the stock or stocks in your underlying portfolio may be decreasing in value. But to be honest, don't worry, there is no stock on the planet that is guaranteed to appreciate forever. Another thing to be cognizant of when you are dividend investing is that you can't just pick the stocks with the highest dividend yield. While that may seem like a good idea, there could be reasons why the company is offering such an enticing dividend. For example, a company may have a ton of underlying problems, but in order to entice investors and their money, they may increase their dividend. So it's important to pick companies that not only offer an attractive dividend, you also want to pick companies that have a solid outlook. Another risk in dividend investing is that dividends are never guaranteed. Companies can, and often do, reduce or even eliminate their dividends. Just over the past year, many businesses either reduced or eliminated their dividend altogether due to financial pressure from the COVID-19 pandemic. Another risk or downside of dividend investing is the opportunity cost of not investing your money elsewhere. As we discussed earlier in this video, companies that issue dividends are generally more mature and can't be thought of as growth companies. So if you invest in dividend companies, you might be missing out on some serious stock price appreciation that you may have had if you invested in Zoom or Tesla or Peloton instead. The moral of the story is that investing requires patience and requires diligence. The truth is that the majority of us aren't going to make enough on salary alone to have enough money for retirement. Whether it's through dividend investing or through growth investing or through real estate investing, I just want to hammer home the idea of saving a portion of your income and investing it over the long term. I wanted to show you the AT&T example to not only show you how dividends work, but also show you what's required in order to make $1,000 in passive income a month. The secret to wealth creation is time. Simply put, the longer you invest your money, the more money your money will make, especially with reinvesting your dividends, which is essentially a form of compounding your money. And with compounding your money, the majority of your money is going to be made in the latter years. Even if we take the AT&T example that I showed you earlier, and instead of 20 years, we invested that money for 40 years, we would have over $825,000. So the first 20 years made you $179,000, but the next 20 years made you almost $700,000. That's the power of compounding, and that's the potential power of dividend investing. I'm not telling you not to take risks. I want you to take calculated risks, especially if you're young. But I also want you to be cognizant of how important and powerful saving and investing your money over the long term is. If you make enough money to retire on your salary alone without investing, more power to you. But that doesn't mean you can't do this in addition to your day job or your business or your side hustle. If you're 25 years old and watching this video, I just showed you a historically proven way of how you can have almost $1 million by the time you retire with a $3,500 initial investment and a $350 monthly contribution. That's not too bad for a worst case scenario. I mean, I'd rather have $1 million in retirement than not have $1 million in retirement. With that, ladies and gentlemen, I'm going to call it a video. Thank you all for watching, and please hit that like and subscribe button so that I can create more content like this. I'll see you all next time.
I've been around the world, I've seen a million girls, but no matter what I do, ain't nobody like you, I've been around the world, I've seen a million girls,